Welcome guys, this is Melody FS Academy, and if this is your first time of coming across this channel, please do well to subscribe, turn on the notification bell to get notified when we upload our weekly content. Okay, so I want to welcome everybody to another episode on the smart money concepts trading model series. Okay, so in today's episode we're going to be looking at the propulsion candle. We're going to be talking about the propulsion candle. Okay, so remember our telegram group link is always attached to the description box. So if you have any questions you want to ask, or you have any challenge that you want us to look into together, you can always join the telegram group. Okay, it's free and it's gonna, it has a purpose of why it was created. Okay, so you just join the group to, to benefit from it. Okay, so now let's go down into today's teaching. We're gonna be looking at proportion candle. Okay, so now we're going to be looking at it from two different angles. We're going to be looking at a bullish proportional candle and a bearish proportion candle. Okay, so we're going to start with the bullish proportion candle. Now, a bullish proportion candle, or rather a bullish proportion block, is a candle that has previously traded down into a down close candle or bullish order block. Okay, and takes over the role of price support for higher price movements. Okay, so I would really like to apologize to those that are, finding it difficult to understand because of the lack of subtitles. Okay, so that is why basically I tend to add lots of notes. Okay, that's why I tend to add lots of notes so that we can all get the definition, the major definitions of what I'm trying to say. Okay, so the definition of a bullish proportional candle is simply a candle that has previously traded down. Okay, you can see the right up right here. Okay, traded down into a down close candle or bullish order block. Okay, and takes over the role of a price support for higher price movement. Okay, so we are going to look at a graphic illustration before we go into a real price action data. Okay, so of course this is a graphic illustration, right, of a price action same sample data. Okay, so in other words, this is price reaching for a kind of higher time frame support level, right? We frame all our setups is framed around a higher time frame, around price reaching for some sort of higher time frame reference, institutional reference point. Okay, so this could be anything from a bearish a bullish order block, a fair value gap, an old low, um just any of the institutional reference points. Okay, so now uh the underlying the underlying trend, of course, is bullish, right? We are anticipating higher prices. Okay, so now this is price dropping down into a higher time frame support level. Okay, so let's go down further. Now, as you can see, we have a down close candle which shows the willingness of price to move higher. Okay, so now this is price. Okay, this is price trading down into that uh higher time frame support level, right? So we, as you can see, we had the willingness, we had a displacement. Price showed the willingness to move away, okay, to expand higher, okay, to move higher, right? Then we have a new down close candle that trades right back into it. Okay, that trades right back into it. That candle becomes a proportion candle. Okay, so remember the definition of the proportion candle for a bullish proportion candle is that it is a candle that trades that has previously traded down into a down close candle or bullish order block. Okay, so now we had price reached for a higher time frame support level, right? Then we had the expansion or the displacement, and this automatically becomes another block. Okay, right? This automatically becomes another block as price expanded, moved away from it. Okay, so this is a future reference, institutional reference point that we expect price to reach back when we anticipate price to come back into it in the future, right? So we draw that out in time, and as you can see, we have price reaching back into this bullish order block. Okay, so now the proportion candle is our proportion candle. Okay, remember the definition says it's a candle, okay, a candle that trades back into a previous down close candle or a bullish order block. Okay, so a particular for a bullish proportion candle, it has to be a down close candle. Okay, it has to be a down close candle that trades back. Okay, it's simply a down close candle that trades back into a previous bullish order block. Okay, so this was a bullish order block, right? We had the last down candle before this expansion move, and price retraced back down. Okay, so this down close candle that traded back into this previous bearish order block is bullish order block is known as the proportion candle. Okay, so this right here is our proportion candle. Okay, because it trades back down into a previous bullish order block. Okay, so remember the candle has to be a bearish candle. Okay, it has to be a bearish candle, and the underlying trend has to be a bullish trend. Okay, it has to be a bullish trend. Okay, the underlying tone should be a bullish trend. We should be expecting, otherwise we should be expecting higher prices. Okay, so now this is our proportion candles as it trades back into the previous bearish bullish order block. This becomes a proportion candle. Okay, so let's go down further. What makes it a proportion candle? Okay, now what makes it a proportion candle is that it has already drawn back down into an order block that is already predisposed to go higher. Okay, so now what makes this candle an order block, a proportion uh, candle, like we made mention earlier, is that it has traded back down into a previous bullish order block after displacement, after seeing a displacement, after the market has shown a willingness to go higher. Okay, so as you can see, we had this last down candle that traded into the support, higher time frame support level. Okay, and we saw some expansion, some rally, some moved away from the support level, right? So it created displacement, right? And we had this bullish order block, right? And this particular candle traced back down. Okay, was drawn back down into the previous into a bullish order block, right? Into a previous order block that has already shown some, that has already showed some interest on going higher, expanding higher. Okay, now and then we created another higher order block that touches the initial one. Okay, so this is the higher order block created that touches the previous order block right here. Okay, so this down close candle became a order block when it created this same rally up, right? So but the process, okay, but the process of which it came back down, was drawn back down to this previous order block, it is then referred to as this as a proportion candle. Okay, so the candle that trades back into a previous bullish order block is referred to as a down close candle, as a proportion candle, sorry. Okay, so now that new higher level bullish order block will be highly sensitive, and it should never see the mean threshold break. Okay, so now this is the rule to which, when trading with a proportion candle, okay, the rules is that the price should not trade through the mean threshold of the proportion candle. Okay, in other words, how do you know your mean threshold of your proportion candle? Is by taking out your fib, measuring it from the low to the high. Okay, so the mean threshold is the middle point, is the 50% level of the whole candles range. Okay, so now when we mark this out in time, as price retrace back, as price draws back down to the proportion candle, it should not trade below the midpoint of the candle. Okay, if it does that, that automatically calls off the trade, that invalidates this candle as a proportion candle. Okay, this is because this candle, the proportion candle, is going to be highly sensitive. Okay, should be highly sensitive. In other words, price should react off it immediately. Okay, price should not trade below it. price can trade a little bit into the proportion candle, but it should not go below the mean threshold, below the midpoint of the whole candles range. Okay, so we expect this candle to be highly sensitive. Okay, so now let's go down into the price action and look at how that looks. Okay, so this is a market that is predisposed to go higher, right? A bullish market. Okay, we are on the buy side of the curve, right? The market has going up. Okay, so now certainly you can see this is price reaching for that higher time frame support level. Okay, so what we have here is that we had a stop hunt, right? We had a stop hunt, we had a run on liquidity. Okay, then we had a shift in market structure to the upside. Okay, so we had a displacement, right? Price showed the willingness to go higher after reaching for that higher time frame support level. Okay, price showed the willingness to go higher. All right, so now what makes this candle then? This candle automatically becomes an order block, right? Because we had a stop hunt, right? We had a run on liquidity, price reached into that higher time frame support level. Okay, then we had the shift in market structure up. Okay, price created a displacement, showed the willingness to go higher. Okay, then it started retracing. Okay, it started retracing, traded into it the first time, went up and came back the second time and created the displacement. Okay, while this is our proportion candle. Okay, this is our proportion candle. You might ask, why not use this one? That is because we didn't have we didn't have displacement from this particular one. Okay, so the displacement was created from these candles. Okay, so this is our proportion candle because it traced back down into a previous bullish order block. Okay, so we use this as a reference, institutional reference point. We draw it out in time. Okay, so now what validates this more as a proportional candle is the fact that we also had a break of structure to the upside. Okay, you can see that we had a break of structure. Price created a higher high from this point. Okay, so now when price created this higher high, obviously it started retracing, and when it traded down into this proportional candle, this becomes our entry. Okay, so now remember the rules for a proportional candle is that it should not see a movement below the midpoint. Okay, and you can see now, I want you to notice something else. You can see the bodies of the candle staying above the high of the proportion candle. Notice how the bodies of the candle stays above the high of the proportion candle, even though we wicked into the proportion candle, but the bodies of the candle remained above it. That is proof that this proportion candle is indeed valid, and it also shows the sensitivity that it shows how sensitive the proportion candle is. Okay, so now let's look at it with our fib to see if we traded below the mean threshold. Okay, you can see this. Now this is how we measure it, right? Taking our fib, we measure it from the low to the high. Okay, because we are expecting higher prices. Okay, we measure it from the low to the high, and the midpoint, as you can see, this is our mean threshold. Now notice we didn't trade through. Okay, although this one wicked in a bit, but it didn't reach below the mean threshold. Okay, and you can see the body immediately it came down below the previous candle's low. It's rejected immediately. The movement was swift, and as you can see, of course, we had a great takeoff from a great expansion, great move from just trading the proportion candle. Okay, so this is just the bullish proportion candle. All right, so now let's look at how the bearish proportion candle is. Okay, so now for a bearish proportion candle is a candle that has previously traded up into a up close candle, or bearish order block. Okay, sorry, I made a mistake there. Bearish, this should be bearish order block. Okay, and takes over the role of price resistance for lower price movement. Okay, and of course we had a graphic illustration here. Okay, we had price, this is price reaching for that higher time frame resistance level and showed displacement. Okay, showed the willingness to move lower. Okay, shows the willingness to move lower. Now as price trades through below this, the low of the last time up close candle before the up move. Okay, below above into the below the last up close candle before the up move. Okay, this automatically becomes becomes a bearish order block. Okay, the last down candle before the last up close candle, sorry, before an up move. Then we had price trades below that, okay, and price reaches back into it as time goes on. Okay, so let's look at that now. As you can see, we have an up close candle which shows the willingness of price to move lower. Okay, we have this last up close candle before the down move. Okay, this is the last up close candle before the down move. So price showed the willingness to go lower, and when price traded below the last up close candle, this candle automatically became a bearish order block. Okay, so we had displacement, right? And as you can see, price trades back into this a bullish and up close candle trade back into the bearish order block. Okay, so now and there we have a new up close candle, which is this, that trades right back into it. Okay, that candle becomes a proportion candle. Okay, so this candle right here that trade this candle that this particular up close candle that trades back up into the previous bearish order block candles becomes a proportion candle. So we can mark this out in time and expect it and expect price to reach for it, to be drawn back to it as an institutional reference point. Okay, so now why do we use the bearish proportion candle? Okay, why do we let's say probably you missed the order block. Okay, so let's say you put up your chart, and the reason why is that, let's say for example you put up your chart and you saw price has already reached for resistance level, broken in structure, traded back into this into the bearish order block. Okay, and price has already created a displacement. Okay, this the proportion candle will offer you another opportunity in getting in. Okay, so that is just the reason I'm sharing this. Okay, if you missed an entry with the bearish order block, okay, you can get in again on a proportion candle. Okay, so now this particular candle is our bearish proportion candle because it traced right back into the previous bearish order block. Okay, so now what makes this a proportion candle is that it has already dropped back up into an order block. Okay, drawn back up into an order block that is already predisposed to go lower. Okay, so this order block shows displacement. Okay, it has displacement, created displacement. Okay, it shows the willingness to go lower. Okay, then that new that then created another lower order block that touches the initial one. Okay, which is the last up close candle before this displacement, right? That new lower level bearish order block will be highly sensitive. It should never see the mean threshold break. Okay, same rules is applied to the bearish order block, right? The mean threshold of the whole candles range should not be broken. Okay, price should not trade above it in process of when it's being drawn back to the bearish proportion candle. Okay, and as you can see, we have price trades back up into the proportion candle and sells off. Okay, so let's look at how that looks in price action. Okay, so now we have a market has predisposed to go lower. Okay, we have market has just reached into a higher time frame resistance level. Okay, so now let's do some annotation. Okay, so we have, of course, we had a stop hunt trigger, right? Then we had a shift in market structure. This is the last up close candle. Sorry, this is the last up close candle before the down move, right? So we have price reached for it, but uh this is a down close candle. Remember, this candle is a down close candle. Okay, it's a bearish candle, so this cannot be considered as a proportional candle in the nearby in the as we proceed further. This is not uh a proportion candle because it's a bearish candle. Remember, the proportion candle, we are looking for a bearish proportion candle. It has to be an up close candle. Okay, it has to be a bullish candle. Then going forth in price, we had a bullish candle that trades into the OB, okay, and creates displacement. Okay, so now you might be asking, price was initially retracing up here. Okay, so you might be looking, was there a shift in market structure? Yes. Okay, it might be a little difficult to identify, but notice this candle. Okay, we had a candle that has a low, a high, sorry, a low, a lower low, Now we had a candle that has a higher low to the right side of it. Okay, so this automatically is a short-term low being formed right here. Okay, so when we had this expansion higher, we had a high, a lower high to the right side. Okay, so we had a short-term retracement here and a short-term low right here. Okay, so this was a short-term turnaround and another short-term turnaround. So this initially became our new range, creating a higher high. Okay, so the movement is more or less like a low, a high, a higher low, a higher high, and we had a shift in market structure. So when this low was taken out right here, this is our shift in market structure. Okay, so we had a proportional candle that traced back up into a previous bearish order block. Okay, so let's mark this out. This is now our new institutional reference points, right? So let's mark this out in time and see how that looks like. Okay, so now marking this out, our proportion candle, you can see price reach back, price draws back up into the proportion candle, and notice how the bodies stays below the low of the candle. Okay, it only wicked through, but the body stayed below the low of the candle. That shows you how sensitive it is. Even as you can see, when we had another move back into it, the bodies remain below the low of the candle. It's only the wicks only reached for it. Okay, so now let's look if this move went through the main threshold. Let's look if we had our rule followed right here. Okay, and as you can see, we had from the low, sorry, this time around is measured from the high to the low. Okay, from the high to the low, because we are expecting lower prices. Okay, so I actually made a mistake right there. It's from the high to the low. When we are looking for a bearish move, the measurement of a fib is from the low, from the high to the low. Okay, then if we are expecting higher prices, the measurement is from the high, from the low to the high. Okay, so for bearishness, high to low; for bullishness, low to high. That's how we draw our fib. Okay, so in this case I made an error, but is if you flip it around, it's basically the same thing. Okay, price didn't reach above the mid threshold, so the rule was not broken. Okay, so we have our, your entry of course will be right there on the at the low of the candle, and your stop loss will be above the candle. Okay, above the proportions candles high. Okay, so as you can see, we trade off, and this is a nice movement, right? So that is basically all what a proportion candle is. Okay, so the main purpose of the use of a proportion candle is to get you in the move. If you have, let's say you basically missed your first entry, okay, the proportion candles offers you an opportunity to get in the move. Okay, offers you a second entry, okay, for your setup. Okay, so now that is just the all all we are going to be looking at in this lesson. Okay, so that brings this lesson to an end. Okay, so please, if this is your first time of coming across this channel, please do well to subscribe and turn on the notification bell. And if you are yet to join our community on Telegram, please do well to join the community via the Telegram group link on the description box. Okay, so till next time, have a good trading week.